Investors may be seeing signs the recession has hit bottom, turned the corner, whatever phraseology you prefer. But what's the reality on the ground for retailers trying to boost sales? Here with his perspective is Jeffrey Katz, Chief Executive Officer of Leapfrog Enterprises. You know it as the manufacturer of educational children's products, which sells anything, including the Leapster handheld game system and the new Tag Junior book line. I'm afraid, Jeff, I have to admit I'm not all up to speed with every single one of your products. I was, using them heavily a couple of years ago, but I've since moved on. But let us talk, though, about the economic reality for your company. It was a tough first quarter. Analysts expecting another tough couple of quarters, possibly until some good news toward the end of the year. What's it like right now?
Well, it's a challenging year. I would say things are getting a little bit better from the gloom and doom environment of the holiday 2008.
How do you see that, though?
Well, the main thing we see is traffic in the stores, at least for our product, educational product, is pretty solid, but it is a market where consumers want to see a deal. They want to feel some incentive to come buy a product, including ours. But it does feel like there's some increasing interest in consumer products, at least in our case.
So increasing interest, but at a bargain price. Are you under a lot of pressure to keep bringing down prices, or at least to bring them down? I'm not sure how far you brought them down thus far.
I think we're under a lot of pressure to make sure our products look attractive. So not everything is discounted, but you got to have some things discounted. I wouldn't say it's deep discounting either, but we need some incentive out there to keep the consumer's interest.
Now, you guys sell physical products. Obviously, there's a technological component to them.
There is.
There's an interactive component to them. But how much pressure are you facing from people who don't want to go out and actually spend money? They want to turn their kids to the computer and try to satisfy them with anything web-related.
Web is a big trend even for the youngest kids. That's why we have introduced something called the Learning Path that allows kids to play with the product offline, as it were, and then go online and continue playing, and parents get feedback from Learning Path about how their child is learning.
Now, let's talk, though, go back for a moment and talk about the economic environment. Again, based on analyst estimates for sales, it looks as though you may have a pretty good fourth quarter. That's a long way out, but based on what information you're getting from retailers, the people who carry your products, is that a reasonable expectation right now?
Well, we think it's a reasonable expectation. We've told analysts that we think we're going to see some modest growth in the fourth quarter versus holiday 08. And until then, I think it's going to be a bit of a challenging year, but our point of sale trends, what we're actually selling through the cash register, look pretty solid so far.
Now, earnings held up better, at least, than sales did in the first quarter. Are you enacting anything rigid as far as expense controls go? Do you feel the need to shrink staff even further between now and the end of the year in order to remain as profitable, or at least to generate as much as you can off every incremental dollar of sales?
We've implemented pretty dramatic expense controls starting last year and moving into this year. Not sure whether we'll need to do more. We've said that we will do more if we need to, but our cash flow has been pretty solid, and at this stage, steady as she goes.
All right, let's talk about your background and what you're doing, given the fact that you were with Orbitz, the online ticket booking agency. You were the CEO of Swissair, vice president at American Airlines. So a deep background in airlines. How does that help you in toys for kids?
I've been in the technology aspect of businesses for a long time. So I ran Sabre for American Airlines globally for over 4 years, a very computer-centric, technology-centric business. Yes, distributes airline product, and then moved in, and I started Orbitz as the founding CEO. So for about 15 years, I've been pretty solid in the technology business. I came onto the board of Orbitz with a view towards, at that time, the board wanting to web-enable the whole company, and that's ultimately what led me into this role. And that's why this kids playing online is a big part of where we're going at Leapfrog.
But is it a tough time to be transitioning to something more technological, which presumably requires investment expertise, when everybody else is kind of pulling their horns in?
There is that trade-off of how much do you invest in the product versus how much do you cut costs. We've chosen to invest in the product pretty heavily, but on the non-product type of costs, we've really cut back fairly dramatically, the overheads, for example. And I think that's the balance that every company has to face. We've chosen to keep investing in the product line as we move forward.
We've been telling the story to our viewers all morning about the uncertainty for the next 9 months. What's the boldest statement you can make about how you think things are going to shape up over the next 6 to 12 months, say?
I think the boldest statement I would make is that I think people are gradually becoming less afraid. And as they become less afraid, they're willing to take a little bit more money out of their pocketbook and spend on the things they need. Hopefully, Leapfrog educational products will be one of those.
I'm sure you are hopeful of that. Jeffrey Katz, thanks so very much for joining us.
Thank you.
That is the CEO of Leapfrog Enterprises right here on the set with us in New York City.